Everything is going to zero. Sorry, investors, but your money is gone. It's gone. These are the kind of market conditions where you can feel like there's really nowhere safe to put your money. Nowhere left to hide, nowhere left to run to. And yeah, things are pretty bad in the markets right now, but they're really not as bad as some people might have you believe. And in today's video, I want to cover off some of the key market data for you that's actually going to show that we are not going to zero and that there actually may be some light at the end of the tunnel, potentially later this year. My name's Lark and I make videos on investing. Now, if you do enjoy learning about that topic, staying up to date with what's happening in the markets, then do subscribe to the channel and of course whack on that thumbs up button. Okay, let's go ahead and get straight into this. So late last week, a state-run newspaper in China came out with the headline saying that once again, Bitcoin is going to zero. Man, the Chinese state is really obsessed with Bitcoin. They've been saying it's going to go to zero since the first big crypto ban in China back in 2014. And guess what? They have been fantastically wrong about Bitcoin ever since then. Their attempts to ban it have horribly failed. But while Bitcoin may not be headed to zero, as the haters in China say, sorry haters, well that's by the haters too of course, we are actually right now though still in the middle of an unprecedented economic storm, so there's that going on too. The guys from Glassnode are even saying that the data shows that this current Bitcoin bear market, the worst on record, citing that in no previous cycle has Bitcoin actually traded under its previous all-time highs. And of course, it has done exactly that in this cycle. We also had our biggest realized losses in USD value anyway recently, making lots of new records. And I know you love those new bear market records. So here's another one. This is the first bear market where we closed a weekly candle completely under the 200-week moving average. Nice. But of course, it's not just Bitcoin that is cooked. We are also feeling the heat, obviously, as we've covered extensively on the channel here, the heat from the global market dumpster fire that is happening right now. UBS and the New York Fed are both saying that the odds of a hard landing for the US economy are rising. But this has always been really the goal. The Fed right now is essentially overseeing a controlled demolition of the economy. Things got overheated and they don't have a lot of levers to pull. So right now they are trying to force a cool down, which essentially means economic pain for you and your portfolio. They want to cause pain in the markets, and that's exactly what they're doing. And this pain has spread right across all asset classes. Real estate, for example, facing big pain. Demand for new mortgages actually plunged to a 22-year low. Property prices also falling in many key markets. Some are even beginning to talk of a repeat of 2008. Some are even saying it could be worse. Yikes. Right now, the risk of recession, pretty high. In fact, some are already saying the recession is here. ARK Invest's Kathy Wood, she says the USA is already in a recession. Other investors are saying, well, not yet, but it's coming. The chances are very, very high that a recession is coming, and depending on who you ask, they give you different figures, but a lot of them are pointing towards it's coming. And if a recession is confirmed, well, then it's no good news for your portfolio. Investors, of course, remain scared because of this uncertainty in the markets, as is evidenced by the dollar index, which remains strong and has actually just bounced off of key support, meaning that investors are still staying away from risk. Cash is still king in the market right now. When the dollar index goes up, Bitcoin goes down. But isn't this just so typical of bear markets? When it is bad, everyone thinks that it's always going to be bad and it's going to get so much worse and that the end is near for everything and everything's going to go to zero. It's basically the opposite sentiment that we see at market highs when it feels like everything is going to go up forever. Now, real quick, before we get on to some of the other data that actually shows there's a silver lining in all this stuff, if you are a trader, then you need yourself an account over on Bybit. You can actually trade a great range of spot markets over on Bybit. You can also trade their popular futures markets, long and short top coins, get into hot token sales. Walken just did a 10x. That was crazy sale. If you use the link down below in the description, you'll actually get 30% off your trading fees and up to $4,100 in deposit bonuses. So if you're a trader, go ahead and do check that out. Now, let's talk Hopium, because you know that is what we deal here at the Lark Davis channel, the good stuff. Now let's look at the Bitcoin floor model from Glassnode. Currently, Bitcoin is trading in a very rare zone. In fact, only 0.2% of trading days in all of Bitcoin's history have seen this, the price ranging in this zone. And those days have historically marked bottoms in the market. And I wish I could say with confidence that this time will be the same. But global macro uncertainty does weigh heavy on my mind. And yes, I've been stacking stats, but still, the confluence of so many of these indicators that we normally would use to say, hey, at least the bottom is close, they're mostly flashing. But the macro scene, Then, of course, there's this chart here. This is the Bitcoin accumulation trend. Currently, we are seeing the kind of accumulation that tends to, once again, coincide with market bottoms. And I almost hear you saying it as I'm recording and saying this, but, Lark, what about the macro scene? I know. Look, we do have some interesting news, though. The Federal Reserve's Bullard, he's actually come out and started signaling that quantitative tightening might not have as far to go as it might seem, which is a pretty vague statement, to be fair, but also a potentially very big statement. We'll see how that plays out. That being said, rates are going to continue to rise for probably a little while at least, and we probably won't see any huge relief until those rates reverse, and of course, until we have proof that inflation has peaked. Also want to share this with you. Famous investor Michael Burry has suggested that we could even see a bullwhip effect on the retail sector. Basically, right now, retailers are holding way too much stock. And we could see, essentially, this create a deflationary effect as they basically look to get rid of that stock at any price. Prices will have to fall until they meet demand. We are already also seeing commodity prices falling for key commodities that move the globe, right? Oil down 10% from recent highs. Wheat down 33% from recent highs. That's a big deal. This deflation may lead the Fed to reverse course on its rate hikes and, of course, its quantitative tightening policies, as the Fed chief just said, right? It may not be much longer. Obviously, all eyes are going to be on June's inflation data that comes out in around 2 weeks. Final thoughts here for you. Every bear market is met with significant panic, and understandably so. Bear markets are hard, bear markets are scary, and they're really not that much fun. The easy money times, the up-only time, that's a lot more fun. But while some investors panic, call for everything to go to zero, sell everything at massive losses, the reality is that most assets will not actually go to zero. Yeah, some of those altcoins you have, they're probably going to go to zero. Yeah, a couple companies are probably going to go bankrupt during this whole process, but most won't. Bitcoin, Ethereum, they're not going to. A lot of the top coins, they're going to be around. Solid stocks, they're not going anywhere. Property, it's not going to disappear or lose all of its value overnight. Metals, they're not going anywhere either. And look, all this stuff short term is taking a big hit. But the fact is that these are the market conditions that create big opportunities for the investors who stick around through it. Those of you who can stay invested, who can keep investing consistently during the bear market, you're going to end up just fine in the long run. Many of the world's richest investors, the famous guys, that everyone looks up to, they made all of their money when the herd was running into the crocodile-infested waters in a panic. These guys were buying the blood, buying the chaos. The smart investors stayed invested. The smart investors continued investing. The smart investors became millionaires when the markets were rough. And I know it's easy to fall into despair. I know it's easy to get angry at the current market situations. I'm an idiot. What did I do wrong? This is all crazy. Or just get into regret. Why didn't I do this or that or that, the other thing? But the reality is, Those who stay strong, those who stay involved during this time are the ones who are going to make it. Look, you've made it this far on your journey to financial freedom. Don't give up now. It's still out there. Just remember, if you're investing in crypto, what you are investing into is the biggest and fastest moving adoption curve of any technology since the internet itself, as this chart here released recently by Wells Fargo shows. Now's not the time to quit. Now's the time to find edges. Stay invested to build your portfolio for the next bull market. Anyway, your question for today. Do you think we're going to see any kind of relief for the markets by the end of the year? Or is 2022 going to be just pain only? Let me know down below in the comment section. Thanks so much for watching today's video, and peace out till next time.